Okay, guys, I feel like in one way or another, in a lot of my videos, I talk about this stock. Whether it's a portfolio review, I am a long term shareholder of this one, or whether it's kind of a video where I'm addressing misconceptions, I'm addressing biases, different things like that. I feel like I always talk about this stock. Um, I might complain about kind of how people view it. So it's only right that I make, a full video about this one. I've got a lot to say, so I'm going to try and keep this organized. But that stock is ticker MO. Altria is the stock. Real fast for the inspiration of this video. Today was my first day back to school, first day, second semester. We're going through the syllabus and stuff in class. So what am I doing? Wasting time on Reddit. See some comments about, Altria. And I see this one in particular. For long-term shareholders of Altria, are you starting to question it? Good question. Seems like its best days are behind it. People aren't smoking like they used to. Is this falling closer to a trap by the day? Guys, I've got a lot to address with this one. I've made some notes over here. So today we're going to go through a few misconceptions. One is that this is a dividend trap. The other, smoking is a thing of the past. We're going to talk about where I stand on that topic and where Altria stands on that as well. Thirdly, we're going to go through some metrics. Fourth, we're going to go through some charting and stuff, and we're going to explain kind of how you can derive total return with this one through that dividend yield and share price appreciation. So it's important we take the right lens to this one. And then last, I'm going to go through, my entries in this one, guys. I am a shareholder, as you guys probably know if you've been with me. But let's get into it. First, this guy says, is it falling closer to a trap by the day? So essentially what he's referring to here is a dividend trap. A dividend trap, I'll give you an example. If a stock price is beaten down, it falls lower, that's going to drive the dividend yield, that starting yield, it's going to drive it up, right? That's how the math behind things works. So essentially what he's saying is it's got this high yield, it's going to attract investors, but it's an unsustainable dividend. And, that's where the trap part of it comes in, guys. We're going to go ahead and dispel that rumor, guys. Altria, we'll look at their dividend summary real fast before we dive into, the sustainability of this dividend. So today I'm using Seeking Alpha. Altria's dividend yield right now is 9.5%. That comes out to $3.92 on an annual basis. An earnings payout of 76.77%. A 5-year growth rate of 5%, which does exceed inflation in the past 5 years. And then a dividend growth track record of a staggering 54 years, guys. That's all great, but is this one a dividend trap? So, if you've been with me, my kind of measure of dividend sustainability is going to be that free cash flow payout ratio. Okay, so what percentage of their free cash flow does Altria use to return to shareholders in the form of a dividend? Right now, Altria's cash flow payout ratio on a forward basis is sitting at 82.47%. Pretty in line with their 5-year average of 78.81%. Slightly higher, but, I'm not so much bothered by it being slightly higher. And guys, I show this number 82.47%, and you're like, you're saying this is sustainable, but this is a much higher, percentage than a lot of other stocks you cover on your channel. It's higher than you see on, we went over T Rowe, we've gone over Apple, Coke. Guys, I get it. You see this number for the cash flow payout ratio, 82.47%. And, that means a good chunk of their free cash flow is going towards their dividend. But, we need to talk about why this is kind of uncommon or why this is kind of common for companies in this sort of sin stock sector. Okay. So there's a few reasons, guys. One is that just because of negative sentiment around a company like Altria, there's health risk associated, there's legislation risk. Altria, they understand, okay, they understand that their primary way to reward shareholders is going to be through that dividend. Okay. Because no matter what is happening in their net income, no matter what is happening in terms of their free cash flow, negative sentiment can kind of hold their share price down. Okay. They acknowledge that. They reward investors through their dividend. And, oftentimes that comes with the higher free cash flow payout ratio. Let's look at, what they said in their shareholder presentation. So you can see they've raised their dividend by 4.3% in line with our new progressive dividend goal. Without going overboard on kind of this new progressive dividend goal thing, this is essentially, okay, they have kind of a stated rate that they want to reward shareholders from their, earnings. Okay. So they've kind of put in place year after year, we want this chunk of our income to go back towards shareholders in the form of dividends. 58th dividend increase. I mean, this is pretty mind blowing. In the last 54 years, this is an important bullet here. Okay, guys, and we talk about shares outstanding on this channel a lot. The reason why shares outstanding is very important to us dividend investors is because those shares outstanding are going to be the shares that Altria actually pays the dividend out to. Okay, so anytime we see a company issuing a share repurchase program, they've got 268 million left in their current program, and they expect it to be completed by end of year. Obviously, this is 2023's Q3 presentation, but Altria is in the habit of buying back shares. Okay, and what that's going to do when a company buys back shares, that's going to raise my percentage stake in that company as a shareholder. Okay, so they're rewarding me, they're creating value for the shareholder, without actually having any sort of change in revenue or net income. They're creating value through a share repurchase program, and it's also going to allow them to reward investors with a higher percentage of kind of their stated dividend rate. Let's not spend all day on this, but I thought it was important to kind of look at it from their point of view as well. Okay, moving on. We've addressed comments like this before, but I feel we haven't fully dug into them. And some people might stay away from Altria because of this notion that smoking is a thing of the past, guys. What does Altria have to say about that? We'll look at their 2023 annual meeting of shareholders. Guys, anytime you are investing in a stock or business, it's important to kind of go through, with whatever software you use, look at metrics, look at fundamentals, and analyze it from that perspective. But I also encourage you guys to kind of peek into the resources that actual company has provided to shareholders. I will say it is much less of a headache to be, invested in a company that is very focused on communicating with shareholders, and you can kind of get a sense of, okay, where are their heads at here? So they start their meeting off and they say kind of not their mission, but their goal is to responsibly lead the transition of adult smokers to a smoke-free future, guys. Okay, so you're like, oh, this is a cigarette company. How can they stay in business in a smoke-free future, guys? Okay, well, they address that, and we're kind of going to look at, what the future is. They included this graphic. I guess we can look at it real fast. It says risk cliff between combustible and smoke-free products. So essentially what they're saying is, products with more combustion, more burning, are much higher risk than their smoke-free tobacco products or smoke-free nicotine products. And, they're kind of trying to move adult smokers, down this curve to a lower risk portion. However, where are they going to get these smoke-free products? Still are going to be Altria's products. Do we understand that? This is very important. So, let's look real fast at their future smoke-free portfolio, guys. Obviously, right now, cigarettes are making up the bulk of Altria's sales, but, there's a lot in the pipeline. And those things include e-vapor. Okay, so this is going to be like, a liquid that doesn't actually require, combustion. It just, listen, I'm not a scientist, but e-vapor, heated tobacco, which is going to be kind of a thing where like you put real tobacco in and then it heats it up so much that it creates smoke. Again, I'm not a scientist. And then oral tobacco, guys, traditional chew as well as pouches. Altria is kind of determined, this this nicotine space is kind of trying to move away from smoking. It's tough, obviously. It's a very, addictive thing, but Altria is trying to lead the way and, offer their adult smokers a pivot, okay? A pivot, hopefully a safer pivot. And, that's where Altria is on this whole notion that smoking is a thing of the past, guys. All right. Next up, let's look at some metrics. First off, we're going to start with, I guess we'll start with revenue, guys. And sometimes, I talk about how every stock you need to look at through its own lens, kind of take the story it's giving you, but also understand that, different stocks in different sectors are going to have kind of different nuances, I guess is the best way to put that. So we look at their top line, December 2018, 19 and a half, December 2023, 20 and a half. Okay, so this one has grown revenues, but it's been slower growth. It's been more along the lines of like, 1 to 2% revenue growth per year. How does that hit their net income? Net income growth has been a little more attractive. Obviously, 2019 was an outlier. But what this means, guys, is Altria is able to, increase their margins while their revenues aren't increasing as fast. Does that make sense? So they're able to take, a pretty similar level of revenue every year and translate that to, okay, a bigger bottom line. And there's one thing I think is important for us to understand here. I kind of had to dig on the internet. I was kind of hoping I could find a little better visuals, but let's look at margins here, guys. So obviously, Altria has committed to kind of their smoke-free future. They understand it's going to take time, but how does that affect us as shareholders? Guys, the margins on oral tobacco products are actually quite a bit higher than their smokable products. That came as a surprise to me because I was kind of under the impression that cigarettes were like one of the most high margin products you could have. However, if they can continue to kind of keep the same revenue, but shift more and more towards oral tobacco or smoke-free products, their margins should increase. And, that should translate to more net income and in turn, free cash flow. Without getting on too much of a tangent on that, let's go back and look at some metrics. Let's go down here and look at free cash flow per share. Guys, I talk about this in a lot of my videos. I really like this because, free cash flow is a very essential metric to dividend investors because, that's where dividends are being paid out of essentially. However, this free cash flow per share, it goes ahead and takes it one step further, and it takes the free cash flow divided by the shares outstanding. So, with that, we're going to see share repurchases or share buybacks kind of show up in these numbers here. Does that make sense? And the reason why I love to analyze this line so much is because, as a dividend investor, it kind of gives me the idea of, okay, how can they grow their dividend in the future? All right. Rather than just looking at, trailing dividend growth rates or other metrics like that, I like to look at free cash flow per share, try to identify, some sort of strong uptrend, which we certainly see here with Altria. December 2018, $4.32 a share. December 2023, $6.27 a share. So, we like to see that. That's a pretty aggressive growth rate of free cash flow per share. I guess we could do the math on it real quick. What am I doing here? It's about so it's roughly a 45% increase in free cash flow per share just over the past 5 years. I mean, that seems pretty impressive for a company with this kind of track record and a company, at this stage in the game. Let's move on. Hopefully we will see that free cash flow per share continue to increase aggressively, in years to come. I guess we'll have to wait and see. And then, before we move on to my entries, guys, a lot of people might kind of stay away from Altria because, okay, they're thinking, how can I make money with this one? We look at the 3-year chart. It's basically break even. Well, the S&P 500 is up 23.61%. I did want to bring this up, and I think people are thinking of this wrong. We talked about how Altria, their main way of rewarding shareholders is going to be in the form of the dividend. So if we go to total return, which will include dividends, then I guess we'll kind of get a better story. And we can see here Altria being this orange line, S&P 500 being this blue line. On a 3-year basis, Altria has actually outperformed the S&P 500 in terms of total return. Does that make sense? Okay, so with that being said, guys, let's check out, my own positions in Altria, guys. I am a real dividend investor, trust me. Ahead of being a YouTuber, I just started making YouTube videos, and I've been dividend investing for, a very long time. So let's look at some of my entries in Altria throughout the years. Probably make this a little smaller. Okay, you can see I have a total of 247 shares of Altria at an average price of $44.61. That brings me to a profit loss open. Again, this is just on a share price basis, but a profit loss open of $666. And now let's look back at some of the entries. Okay, so, I started adding this one in mid-2019, kind of as I saw it fall from all-time highs. I started adding kind of cautiously. I see more dips, and I keep adding through 2020, and then, it seems to have a reversal. So I kind of put buying on pause with this one. And then, another big pullback. Now I've added pretty aggressively, as Altria has continued to increase their dividend over these years. And now we've seen, some of these shares have got it like a 10% yield, which is pretty crazy. But, I've continued adding in kind of this consolidation. On the long term, I've got a wedge pattern kind of drawn here. And, we'll talk about my plan for the future. So the future being 2024, if we do see Altria kind of consolidate and kind of do what it's been doing, which I don't think would be too surprising, I will pick up a few more shares. If we see Altria pull back even more in 2024, back towards this $30 mark or 35, anywhere lower than where it's at, I'll probably pick up more shares aggressively. If Altria does break kind of this long-term wedge to the upside, I'll probably put buying on pause, kind of like I did here in 2021, and I'll just enjoy that dividend income and use those dividends to kind of buy, other opportunities, guys. With all that being said, I'm Cashflow Cart. I hope you enjoyed today's video. Thank you for joining me, and I will see you in the next one. I post new dividend content on Mondays and Thursdays at 1:30 p.m. So again, I'm excited to build wealth with you this year. Everyone have a great day.